welcome to the closing beat, everybody. Happy Wednesday. How you doing out there? I hope you're having a good day. All is good. Everybody's good. This is a quick show that we do. We call it the closing beat, new updated look and feel and everything, trying to make it a little bit better for you guys because we like to share what the markets do for the day. We also like to teach you something if we can, and today will be no different because it was a rather active day in the market, but a rather predictable day if you were paying attention there. So let's take a look real quick. Go off to the right there. You've got the Dow, S&P, NASDAQ, and Uncle Russell. That's the Russell 2000. All positive on the day. It was a rather choppy day of trading, but finished near the high, so that's a good sign for the bulls if you enjoy that sort of thing or you're happy with that sort of thing. Let's just take a look. Let's go on over here. We'll take a look at the stock market today. You can see the numbers there. The S&P back and forth. Monday green, Tuesday red, Wednesday green. Choppy day back and forth. And I'll actually I'll point this out while we're here. I won't give it all away for the members out there, but if you happen to go to jazzwealth.com/research, we have a new membership site. It's very cheap. It's like $13, right? You come join us there. And we're actually sharing data, research, and things that we're doing. Not a stock picking site, but sharing some of that data there. You can actually just join. If you go to that website, give you an idea of some of the things you're looking at. And $14 a month, $13.99 a month to come join us there. Very inexpensive. The idea is just try to help you guys learn something, teach you a little bit along the way. If I could teach you a little bit, it helps us expand. We're looking to do some things here. But one of the things that we talked about on the research site was actually the performance of the markets in this week. Actually shared the average trading average gain in every single day over the whole course of the year, and we talked about this week in particular, and that's basically exactly what's happening. Slight bullish lead here for the markets, but that's basically what's happening. And then if you remember, you haven't checked it out yet, go over and check out today. I'll share this part with you here. What we did is we did a little quick study to see, let's take the whole month of June, plot all the headlines on the chart, and see what types of responses the markets had. What would happen if you plotted the news on a chart versus like earnings or something like that? So just a quick post for you there today in the research section, jazzwealth.com/research if you're interested. As far as the stock market goes, we're in chop land here. Now you know a little bit more about why, and if you remember, you know why as well. NASDAQ was the strongest of the group today. New record close, by the way. Not a new record high, but a new record close there, adding 1%, just over 1% on the day. Here's the issue. There are three stocks that accounted for the majority of the gains in the NASDAQ today. And that's funny, and to be exact with you, just over 65% of the entire day's gains in the NASDAQ came from three names: Microsoft, Apple, and Amazon. So, yeah, what happens when those three stocks take a break? But very clear what's going on in the NASDAQ if you haven't been paying attention. Also, JD.com looking good as well. It's a Chinese company here, hitting new 52-week highs. The Chinese company's all doing well. Monday on the closing beat, we talked about how the Chinese government said, go buy stocks. They told their citizens, go out there and buy the stock market. And as we showed you, if you look at the A shares there, their markets took off. The Chinese wanted to support their own economy, their own stock market there, and they did. So I thought that was interesting. JD stuck out as one quite strong today. The Russell was positive on the day as well. However, lagging behind a little bit, just looking a little bit weak there relative to everything else. Can't get above the 200-day moving average. Not looking really the best out of the small caps there. They got a big position, big allocation to financials. Novavax was one of the ones that pulled back today, weighted on the Russell just a little bit, down 6% on the day. It got extended, man. It's just taking a little bit of a break there. You got another pharmaceutical in here. INO took a little bit of a break. It was very extended as well. It's going to get a little choppy in here for that stock. And then Overstock.com pulling back as well. A lot of these bought names got pullbacks, Tesla included, but that's not in the Russell 2000. So just something to point out there if you paying attention to the overall stock market. In general, looking good. Slight bias to the bullish side, right? Slight bias to the upside. We're above 200-day moving average. Just a little overhead resistance at 3,200 area for the technical traders out there, but basically low volume or lower than average volume, just trending higher, but in a very choppy way there. If you take a look at some of the virus news, I'm going to keep updating you on this stuff here. It's not good stuff. Well, let's update you here. We got something new to share with you. Coronavirus cases, those are going to be up on the day. Hospitalizations hit their highest level, and I only really have this way to share it with you as just the total. Hospitalizations keep moving higher. Yesterday, I pointed out that the deaths per day had a slight uptick, but it was choppy because on Monday we hit a new low. Well, come to find out, that's actually because of the lag in the data over the holidays. So the the deaths per day didn't actually go down if you average it over the last 4 days. It actually stayed just a little bit higher than expected. The data was just lagging because we were all on vacation, apparently having a good time. For example, if you look at Arizona, Arizona had 4 deaths on record on July 5th, 1 death on July 6th, and then 117 on the 7th. That's not accurate, right? California, it was 18, 6, then yesterday 111. I'm sorry, today 100. Well, it'll be yesterday's data. 111 there. Michigan was 0, 3, then 30. Alabama had 0, 0, then 26. So that gives you an idea what's going on there in terms of a little bit of lag data there. So the charts are going to look a little messed up if you're plotting the virus data with you there. Arizona still leads in terms of the number of cases per day per million people out there at 507. And Vermont is the best state out of all of them with only 10 cases per day for every million people that are out there, unfortunately, that have it or have gotten it. Our FinTips videos this week, we did the best mutual funds of 2020. We took a look at the performance so far, large cap and target date funds. We did 4 ways to reduce your capital gains tax today. Actually went out on our YouTube channel. And Friday, we're going to talk about an IRS change to the RMD rules for this year that they didn't even get the government's approval for. They just decided we're going to make this happen. Tomorrow, if you're one of our customers, we'll join you in the speakeasy there. We're going to do an update on our portfolios, which all of you can see on our website as well, and the performance, but we're also going to share some geeky fun stuff with you there. Let's go over the sector breakdown, take a look at what's going on with the overall sectors. I'll try to pop this guy up. Yeah, there you go. You can see everything nice and clean there. We'll start with tech. Looking at tech, you got a new record close there for tech. That was going to be basically because of Microsoft. You look at Microsoft, well, and Apple as well. Microsoft, Apple had really good days today. Microsoft, by the way, added $200 billion to their market cap just in the last 2 months. I've got a fun way to share that with you. If I go over here and we look at market cap, this is Apple and Microsoft, but it's only showing you the market cap, not the price of the stock, just the market cap. So you see in trillions here. It is a dead tight race for these two so far this year. Currently, Apple leading the way, $1.65 trillion in value, 1.61 for Microsoft. But if you look over just the last 2 months here, that's where the bulk of it came into play. If I back out Apple for you real quick, we'll go back over 3 months just so you can see here, jump in the middle of this thing here. Look over the last 2 months from 1.3 trillion to 1.6 trillion. It's almost $300 billion just in that short time period. They're very, very impressive for those two. Anyways, Apple did good today. Oh, there you go. Apple's new closing highs as well, and those two were representing the tech stocks today. Basically, that was the reason that sector was higher. Basic materials, worst performing area, down 1% on the day. Saw $1.05 billion flow out of the XLB over the last month while the sector was essentially moving higher. That tells you there's a little profit taking going on in here because this has been an overall stronger sector. It's not the most exciting, by the way. Ecolab held things back a little bit, little relative weakness there, down day for that one. And Lind, you're looking at that one just a little extended. Got a little profit taking in Lind as well. Going on over to the REITs. You got more relative weakness there. REITs just can't get anything going. Down 5% over the last month. Nearing a 10% pullback for the year so far. If you like your 10% pullbacks, that's coming up. It's about 8.5 right now. But because of that, the breakout idea that we had on a list, American Tower here, the cell tower REIT, unable to break out because the sector just staying weak. And now you know why. We talked about that yesterday as well. Communication services up 1% today, hinting at another little, I would call it a sloppy breakout, but it's hinting at it and showing relative strength today. A lot of it is going to become, most of the gains today come from Twitter. It was the biggest contributor to the XLC today. Twitter, one of the best, I believe. Yeah, it was the second best performer in the S&P 500 today. Kohl's was the first. Griffin, spelled Gryphon, is a subscription service that they're working on, and it became public that they were actually hiring people and working on that, so that is in the works. Stock was much higher on that one there. Not a lot of details on the subscription service, except for content, what you'd pay for, but we'll see. Financials continuing not to perform. No interest in this sector at all from investors. You got regional banks as well trying to break through this uptrend. I put it in here so you could see just the technical line. Really today it held. It tried to do its thing. But man, it it couldn't get anything done. And while I'm talking with you here real quick, let me slide back over to this if it'll allow me. And I want to pull up one quick thing for you because the financial sector is becoming a stock trader's sector, meaning a stock picker's sector. And if I can do it quick enough, I can. I'm pretty smooth these days. Look at that. Let's go over and talk about that. Look at the performance here, how investors have chosen not to buy the sector as a whole, but they have chosen to buy individual stocks. What you have down here at the bottom, you've got names like Wells Fargo. You got Bank of America in the mix there. You got JP Morgan down here as well. And then the other one is Citigroup, right? All laggards in the sector. This is year to date, by the way, if you're up here looking. Now look at the ones that are outperforming. You got Progressive. You got an insurer in there. You got the exchanges, right? You got Moody's performing in there as well, right? Doing quite well, actually. S&P Global, that'd be in the exchange category there. And MSCI. Those are where people are moving. Be very careful if you're trading this sector. It is very rapidly diverging and becoming a stock picker's market. Momentum is building behind the strong names. People are avoiding the large banking centers and, of course, the regional banks as well. So kind of a fun way to take a look at that. I know I'm sharing a lot of extra stuff today. I hope you enjoy it, but that's what you got going on there. We'll look at some commodities here, and then we'll move on. There it is. Gold hitting a new high today, was up $10. 18.20 is where it closed out today. And the gold miners, there you go, hitting new highs as well. And that continues to be because of AU. So Newmont Mining was the big leader there. We talked about that in this whole move higher here. And then just a couple weeks ago, we said, you know what? It's starting to look like AU is now the darling or the favorite stock in the sector. Money moving out of, not the sector, the industry. Money moving out of Newmont, moving into this Anglo Ashanti Gold. So there you go. You're kind of continuing to see that momentum behind that. If you could spot that early, that's very helpful. Crude oil up a little bit today. Still above $40. Very, very quiet. It's just trending sideways, waiting for some kind of direction there. And that's basically all I have for your sectors today. Technical breakdown. You had 18 new highs today. There were 8 sectors, though. The majority of the 18 stocks come from healthcare, technology, and financials, in particular the insurers and the exchanges as well. Every one of them closed in the green. I already mentioned the MSCI. That was one of them, hitting new highs there as well. That is a exchange. You got S&P Global as well. It just further illustrates how people are moving money into those. They're not participating in your Bank of America's, Wells Fargo, and things like that. Moody's is also in the financials, so I'd share that one with you as well. That's what you got going on there. And you had 3 of the 5 FANG names, right? Netflix was one of them, hitting new 52-week highs. Apple you already know about, and Amazon in the mix with new 52-week highs getting a little extended there. No new 52-week lows. This is 8 weeks that we have not had that. So we'll take a look at some of the stocks that we've been looking at. Dexcom, real momentum there, looking pretty good. That continues to be strong. Market access, we talked about this over the last 3 days to show you, well, not only that it is a stock that doesn't have a lot of competition, but breaking out. So technical and fundamental analysis we've been covering there. That one continues to look good. Chipotle continues to take the day off, 0.5%. Not great, just an okay day. KLA 10 Core in the semiconductor space. This is an outperformer in the semiconductor space. It has been and continues to be. And I got a few new ones for you. Potential breakout here on Domino's Pizza. What happens if this virus thing perks up again? You have people unwilling to sell this stock, right? Won't even pull back as much as the markets when they do pull back. But you have people saying, I think I'm going to hang on to this just in case people have to start ordering from Domino's again and I can't go out to eat and all that great stuff. It's happening. Or starting to happen. ACLS looking like a breakout there. Now this one's kind of like ConAgra. It pulled back rather sharply on yesterday. So iffy, right? It goes on a watch list. You look at it. If it breaks to new highs, you'd expect that to grab a little bit of attention there, but we'll see. Strong fundamentally. This is a strong fundamental company as well. So if it breaks out, you'd expect to see a lot of people playing along. And then a couple others, your home builders. Here's Lennar hinting at a breakout there today. Went a long way towards getting towards that breakout. Very strong day, 5.5%. So Lennar is one of them. Look through all of them for you here today. And Dr. Horton, he's here today. Dr. Horton, strong as well, hinting at a breakout. Lennar looking a little bit better technically. Then you've got your counter trend plays starting to set up here. You got eBay extended to the upside there. You're thinking maybe a little pullback, and Tesla did start to pull back today. Not a lot, just a little bit, but $24. That's almost a 2% pullback. You have to imagine that that is profit taking there. And that is your technical breakdown we'll go over to some stocks in the news and take a look at that. Let's stay with Tesla here for a second. Tesla, obviously, it's extended in the short term. Amazing run, great run there. And so Tesla in general, just pulling back a little bit. If you look over the last 3 months, we mentioned this on Microsoft a second ago. Over the last 3 months, Tesla, 60% of its market cap in just the last 3 months. Can I go back to that real quick? Check this out. Let me just go here real quick. Let me see if I can do this, because this is rather interesting. 60% of the company's value coming in just the last 3 months. Take the price out of the equation. Here's Tesla's market cap. In other words, if I back it out, show the entire lifespan there. Here's the last 3 months. Look at that. It's incredible, man. $150 billion plus adding to the value of Tesla, and that's a 3-month time period. Here's its entire lifespan there. So 60% of what Tesla is worth coming all in just the last 3 months. That's impressive. In the membership site, jazzwealth.com/research, if you're a member, one of our posts was about the performance of Tesla. How obviously it's done really well, but how it did it in spurts. How the majority of the time you had to sit in that stock with no performance at all to speak of. So I don't know. I thought that was kind of interesting, something to share with you there. Before we talk about, well, let's do United Airlines. United Airlines down a little bit today, although it finished about flat. They're going to be, their overall capacity for July is expected to be down 75%. They are firing flight attendants, gate agents, ticket agents, pilots. I believe it was 37,000-ish, somewhere in there. I've had a record number of flight attendants calling from Delta, taking the early retirement package, wanting to know what to do with it. Sounds like United is going to be the next there. One day it was all Delta employees. I mean, I joked with every one of them, just saying, your fellow coworker just called me. But anyways, that's what's going on there. And Goldman Sachs got a list out of stocks that they think you should buy ahead of earnings, because next week starts earnings season. And so Goldman Sachs said, look, you can't go buy the Apples of the world heading into earnings. You can't buy the Nvidias of the world heading into earnings, because right now the stock is pricing in perfection in terms of growth, beating on earnings, beating on revenue. And if it doesn't, that's a recipe for a pullback. So Goldman Sachs said, here, we've got a list. And this is just part of the list. They came out with a list and said, let's go ahead and take a look at some stocks that are expected to do well on earnings, but have yet to really pop and see that excitement here. So here's a list. You can take a look at it on your screen. We ranked them by, well, we actually just highlighted the, well, they're alphabetical, but we highlighted them by performance year to date. So like Concho Resources is the worst performer, and somewhere down here, like Fortune Brands is one of the better performers out of the group. But these are still stocks that are suffering just a little bit. Their reasoning to me is exact. I love the way they presented this, basically just saying that these are the stocks that could be the next wave as people take money out of the other stocks that are now overvalued and look for other ways, places to put them. So I'm just sharing that with you guys here today. If you want to take a screenshot or something, do your own research, that is okay. I cannot recommend which stocks for you to buy. Not allowed to do that, but that gets you pretty close, doesn't it? Azul, right? JetBlue of Brazil there said traffic's increased to by 44%. You got Disney in the news today. Stock 2.6% higher. They're going to start the reopening of Disney World in a real way. I think they're still going to limit the park-to-park hopping and things like that, but they're catching up to Universal Studios. Levi's reported earnings there. They're firing some people. It's not going well. Sales are down. You kind of expected some of that, but sales are down. Stock was down 8.3% today. Missed on earnings by 5 cents. They're going to lay off at least 700 people for now. And now I'll mention a few others, and then we will take your questions here. Simon Property Group, dividend, paying out $1.30. Verizon paying out 62 cents. Intuit paying out 53 cents. AT&T 52 cents. And Network Appliances paying out 48 cents. I will take a chance here, try to answer your questions, and see what we can do. We'll go from there. Strong opinions on Verizon. I see it. Yeah. Tesla went sideways for a few weeks, not years. Quite the contrary. Actually has spent a lot of its lifespan going sideways. We actually broke it down by performance there. It doesn't seem like that right now. It's very exciting right now. I'll give you that. That seems pretty exciting there. Hey, Dustin, if I want to buy stocks in the energy sector, what do you need to watch out for? probably do more of a fundamental analysis there. It would be very easy to see your outperformers and underperformers. I don't know which ones you like. Some people like buying the cheap stuff and waiting, and other people like buying momentum. So that would be very easy to spot with any simple scan. What I would look at is the fundamentals. I would look and see what sort of, where they've cut back on CapEx, if they have enough cash on hand, how they've paid their dividends, have they cut dividends or anything like that. There are some that are really struggling. I would try to avoid those, maybe sort by some balance sheet equations there. I would spend a little bit more time on something like that if you can. Yep. Caleb says, any suggestion on where to start learning to trade? You want to learn to trade. Learning to trade. Well, a lot of the platforms out there have good built-in education that's not biased. I don't like the idea of a newbie buying some sort of stock trading program or whatever, because you're usually getting that person's opinion on how they trade personally. You kind of want to learn the nuts and bolts of everything and then find the style that likes for you. So unfortunately, I would say that starting to learn how to trade probably starts at like TD Ameritrade or something, Thinkorswim, where they have built-in education. Learn the basics of everything, then see what you like. Do you like buying breakouts? Do you like buying stocks that gap on earnings? Whatever it may be, and kind of find out what you're doing from there. Thoughts on NEO? So NEO, yeah, that did pull back today. Traded 566 million shares today. Incredible there. Clearly some profit taking going on. I think it's overextended. I mean, I think there's room for this thing to pull back. It should pull back. It is extended. I would not buy it there. There's no way I would pay that price for that. It likes to pull back after getting extended. I need more information from you to be more specific. What's the fascination with Lovesac? Probably part of the name. I don't mean to be immature, but that one gets me every time. Great marketing, by the way. It's kind of like Yeti coolers. What's the fascination with Yeti? What's the big deal? There's millions of different things you can buy that are literally 90% cheaper than Yeti, but people feel like they got to be a part of the brand. They're doing really good with that. Lovesac is. Not as much in my area, but nationally, doing pretty good. I like it. Is there a FANG ETF? Oh, no, you're asking, is the ETF FANG a leverage? FANG is not, that ticker symbol is a stock. That's not an ETF. So I thought you were asking about a FANG ETF, which probably doesn't exist. Yeah. Oh, Dr. Horton, yes, great example there. So if you're going to start segmenting the financials into categories and saying, I like the exchanges, you could then take it as far as you're taking it and saying, of those exchanges, of those insurers, which ones are the outperformers? I know Allstate's had some issues lately, so that one's going to be a laggard, but I like it. You're thinking ahead, man. Thinking ahead. Cheesecake Factory, that's very sensitive stock to be buying into, obviously, with what's going on. So I don't have any thoughts in terms of like price or anything. If you're asking about a particular stock, got to give me some guidance and say, I own it, I'm thinking about buying it, I have partial shares, I want to take a profit. That'll help me be a little bit more specific. Same with things like Visa, right? I mean, obviously it's more of a crowd favorite in the financials than others. FinTech is a crowd favorite, but yeah, I don't know in general. It's moving sideways right now, so it's a tough one to say. Thoughts on the one-year outlook for ExxonMobil, Chevron? Yeah, I mean, you're looking at not the leaders necessarily, but the big sort of behemoth ones out there with like the ExxonMobil and Chevron. If you're buying the sector, you're essentially buying those two stocks anyway, so it's becoming one of those kind of tech-like sectors. So, I mean, that you're looking in the right couple stocks there. I would try to maybe balance it out with some service companies as well, so you're not all stuck in one category if you were trying to build like a portfolio there. Yep. Hey, Guy. That's a great way to start a question. Hey, Guy. I don't know your name, but hey, Guy, I got a question here for you. Is there any way you could talk with somebody in person? You're a newbie in questions and you can't get any straight answers. Well, I don't know who you're trying to talk to, but you are welcome to schedule a call on our website, of course, to speak in person. Keep in mind, we can't give advice. We can't teach you on the phone or anything. We can talk about how we do things here, but happy to talk to them in person. Yeah, that is available on our website. You go to the menu and it's like under services, you choose chat with Jazz. That'll take you there. Yep. I love it. Perfect. TikTok. I heard about that. They may be banning TikTok. That's an interesting one there. I mean, I've heard those rumors there in the past. I don't know that it makes Snapchat more of a buy. I would think out of any of them, the users of TikTok might return to Snapchat versus going and say, well, let's start a Facebook account because I never had one before. I don't see that happening. Yeah. What about shorting Tesla? Well, I think if you short the stock, then Mr. Elon Musk will send you a pair of shorty shorts. I can't blame anybody for wanting to take a shot shorting the stock. Of course, know your risks and know your margin and everything while you're doing that. But I couldn't blame anybody at this point for saying, I'd take a shot. Yep. New York City modifying school plans. I saw the argument in Washington today as well about getting all the schools open and what the CDC wants them to do and everything. No impact. You're right. It said no impact at all. You're right. Because we're in the beginning stages of this, right? It's not like in our state here, they gave people 3 weeks to submit their suggestions and things like that. So we're in the beginning stages. As it becomes more official, it could have an effect. Yeah. Yeah. Oh, yeah. Industries you think will hurt or benefit the most from upcoming earnings? I would talk in terms of volatility, not necessarily hurt or benefit. I think the volatility will be in your big momentum names, the NVIDIA, Microsoft, Apple, which comes a little bit later in earnings season, not right away. That's where I think you see volatility because there's clearly a lot of people, a lot of retail traders, a lot of what are potentially emotional traders participating in those stocks and enjoying the ride. Give them any reason to see that stock start to become more volatile. I think you have a recipe for people that decide to maybe take some profit off the table. So I think you're going to see volatility there. Yeah. Don't bet against Elon. Yeah. If you ask Elon Musk, he would say, well, I'll send you those shorty shorts, but they're going to cost you. They're going to be very expensive if you short his stock, which he actually is. He's tried to talk his stock lower. I've shared that with you guys. Yeah. Oh, yeah. Oh, yeah. All right. I will wrap it up there. I'm just happy mostly everything worked well today. I do appreciate you guys hanging out with us and checking us out. If I helped you in some way, hit the subscribe button. Don't forget our research site. That helps us hire a developer and helps pay for that person to sit here and make some more cool stuff for everybody. So that's the motive, the mission, and the reason behind that. And yeah, enjoy the rest of your day. Adios.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours. Why should you choose Jazz Wealth as your retirement or long-term investing service?